Hey everyone, welcome back to Corporate Decoder. Today we are diving into a story about a company that got a surprise proposal, kind of like getting a prom invite at the last minute, but with a lot more money and maybe a few more strings attached. We're looking at a report from Bluebird Bio, a company in the business of developing gene therapies, which are treatments that modify a person's genes to fight diseases. The report is called an 8K, which is basically a quick update a company sends to the Securities and Exchange Commission, or SEC, to let everyone know about big news. In this case, the big news is that someone wants to buy them. So what exactly happened? Well, on March 28, 25, Bluebird Bio announced that they received an offer from a company called Aramid Limited. Aramid wants to buy Bluebird for a combination of cash and what's called a contingent value right, or CVR. Think of a CVR as a maybe payment. You get it only if certain things happen in the future. The offer breaks down like this: $4.15 in cash for each share of Bluebird stock right away, plus a CVR that could pay out an additional $6.80 force target later on. This offer isn't a done deal, that's why it's called non-binding. Both companies would need to agree on all the details before it becomes efficient in cash for each share of Bluebird stock right away, plus a CVR that could pay out an additional $6,084 per share. But here is the catch. That extra $6.84 only comes if Bluebird hits a specific sales target later on. This offer isn't a done deal, that's why it's called non-binding. Both companies would need to agree on all the details before it becomes official. The filing includes something called exhibits, which are extra documents that give more details. In this case, there's a press release about the offer. Now let's talk about what this means for Bluebird. Getting an offer like this can be a mixed bag. On one hand, it shows that someone sees value in what Bluebird is doing. It could mean a nice payout for shareholders if the deal goes through. On the other hand, it can also create uncertainty. Bluebird's stock price might jump up and down as people speculate about whether the deal will happen. The company might also have to spend time and money dealing with the offer instead of focusing on their research and development. And of course, there's always the chance that the deal falls apart, leaving Bluebird back where they started. So what does this mean in plain English? Well, someone is interested in buying Bluebird Bio. They've made an offer that includes cash now and a potential future payment. But it's not a done deal, and there's a lot that could happen between now and then. Now, as a general comment, it's interesting that this offer comes in the form of both cash and a CVR. The cash component provides immediate value to shareholders, which is always appealing, but the CVR is where things get a little more complicated. It's essentially a bet on Bluebird's future performance. Aramid only has to pay the full amount if Bluebird's sales reach a certain level. This can be good or bad for shareholders depending on how confident they are in Bluebird's ability to hit that sales target. If they think Bluebird will easily exceed the target, they might prefer a deal with more cash up front. If they're worried about Bluebird's prospects, the CVR might seem like a good way to get some extra value if things go well. The fact that the offer is unsolicited and non-binding is also worth noting. Unsolicited means that Bluebird wasn't actively looking to be bought. Aramid came to them with the offer. Non-binding means that either company can walk away from the deal without penalty, at least for now. This gives Bluebird some leverage. They can use the offer as a starting point for negotiations, or they can shop around to see if they can get a better offer from someone else. Ultimately, the decision of whether to accept the offer will come down to what Bluebird's board of directors thinks is in the best interests of the company and its shareholders. They'll need to weigh the potential benefits of the deal against the risks of remaining independent. Now, one thing we don't see in this filing is Bluebird's reaction to the offer. The press release likely contains some carefully worded statements about how the board will review the offer and act in the best interests of shareholders, but we don't get a sense of whether they're excited about the offer, skeptical of it, or somewhere in between. It's all very professional and tight-lipped, as you might expect. From an investor's point of view, this news creates a bit of a dilemma. Do you buy the stock in the hope that the deal goes through and you get a quick profit, or do you sell the stock because you're worried that the deal will fall apart and the price will drop? It really depends on your risk tolerance and your view of Bluebird's prospects. If you believe in the company's long-term potential, you might want to hold on to the stock and see what happens. If you're more interested in a quick return, you might want to take your profits and move on. This kind of situation highlights the importance of doing your own research and not just blindly following the headlines. It's easy to get caught up in the excitement of a potential acquisition, but it's important to remember that there's always a risk that things won't go as planned. In conclusion, Bluebird Bio has received an offer to be acquired, but it's not a done deal yet. The offer includes cash and a potential future payment, and there's a lot of uncertainty about whether it will go through. It's a complex situation with a lot of moving parts, and it's important for investors to do their own research and make informed decisions. Looking at the company's direction, this offer could be a sign that Bluebird is struggling to achieve its goals on its own. Maybe Aramid believes it can do a better job of developing and marketing Bluebird's therapies. Or maybe Aramid simply sees an opportunity to acquire valuable assets at a reasonable price. One notable risk is that the deal falls apart and Bluebird's stock price takes a hit. Another risk is that the sales milestone for the CVR is too difficult to achieve, and shareholders never get the full value of the offer. On the other hand, there's also an opportunity for Bluebird to be acquired at a premium, giving shareholders a nice return on their investment. And even if the deal doesn't go through, the fact that someone is interested in buying Bluebird could be a sign that the company is undervalued and has potential for future growth. In short, this acquisition offer is a big deal for Bluebird Bio, but it's also a complex and uncertain situation. Investors should carefully weigh the risks and opportunities before making any decisions. Thanks for watching. If you found this helpful, give us a like, leave a comment, and definitely subscribe for more insights into the world of corporate filings. We'll keep decoding these reports so you don't have to.